Everyone, welcome back to my YouTube channel. So in this video we are going to cover NBFC's amendment, okay, for May 2025. Very important from exam standpoint, and I want you guys to watch this video till the end. And if you like the video, please do subscribe and share with your friends, so that means a lot for me. So first and foremost, the amendment is there in your net own funds. Okay, earlier the net own funds for NBFCs was 2 crores. Now the net own funds has been increased to 10 crores. So for these NBFCs, if you see NBFCs P2P, NBFCs A2A, and NBFCs with no public funds, and NBFCs with no customer interface, for all these 4 types of NBFCs, the net own funds, there is no change. Earlier also it was 2 crores, now also it is 2 crores. Very important point to remember. Perfect. Now there are two types of NBFCs, one which are already existing and the other one which are incorporating in the current year. Okay, for NBFCs which are incorporating now, so they have to come up with net own funds of 10 crores. Okay, but what the NBFCs which are already existing, okay, for those NBFCs they don't have to increase it immediately, but they have given a cushion period. Let's understand. So let's take NBFC ICC. Okay, currently its net own funds is 2 crores, but by 31st March 2025 they have to increase that net own funds to 5 crores, and by 31st March 2027 they have to increase it into 10 crores. Okay, so by 31st March 27, remember that date. Now when it comes to MFI and factor, so currently the net own funds is 5 crores for it, and by 31st March 2025 they have to increase it to 7 crores, and by 31st March 27 they have to increase that to 10 crores. Okay, here dates are very important, and if you do 1 or 2 times, definitely it will be easy for you guys to remember. Okay, now NBFC Infrastructure Finance Company and NBFC Infrastructure Debt Funds. So wherever you see the word infrastructure, its net own funds is 300 crores, not 10 crores. Okay, infrastructure, obviously the net own funds will be more. Okay, so remember the word infrastructure. Now capital requirements we will see in the end. Okay, first we will finish off all the easy ones. So there is an amendment in risk weighted assets. 2 more risk weighted assets have been added in the current year. First one is retail loans, consumer credit exposure retail loans. The risk weight is 125%. Okay, I'm not talking about housing loans, education loans, loans against gold, vehicle loans, microfinance. It is not applicable for all these loans. It is only applicable for retail loans. Okay, and then credit card receivables, the credit exposure is 125%. Clear? We are done with risk weight assets. Now next one is NPA norms. So you know, right, in bank audits and all, if at any account, if it is overdue for a period of more than 90 days, we will consider that as NPA. In the same way for NBFCs, it was 180 days before. Now they are reducing that 180 days to 90 days, right? So remember, in that way, just like bank accounts as well, NBFCs are streamlining even their NPA accounts. Okay, so now it is 90 days. Earlier it was 180 days. Okay, now NPA norms, if you see, okay, so NPA norms, so here also you don't have to do it immediately. They've given some cushion period, so they are reducing it year on year. Like by 31st March 2024 you have to bring it down to 150 days, from 180 days to 150, and by 31st March 25 you have to bring it down to 120 days, and finally by 31st March 26 you have to make it to 90 days. Okay, any account overdue for 90 days, then that should be treated as NPA. So here if you see the date, it is 31st March 2026, and earlier here if you see for existing accounts, it is 31st March 2027. Okay, it's not rocket science, but definitely you have to do 2 to 3 times of revision. Okay, that is expected. Now the most interesting part, that is capital requirements. So last time there was an MCQ question that is asked from this. Okay, so this time also it will be very important. The entire chapter is important, either from you can get a 4 marks question, or you can get an MCQs as well. Okay, so let's understand. This is the formula for capital adequacy ratio. Capital, that includes tier 1 and tier 2, divided by risk weighted assets. Okay, now the minimum capital ratio is 15% for every NBFC. Okay, now tier 1 capital of every NBFC should be at least 10%. Okay, and then NBFC lending gold jewelry, if any NBFC is into gold jewelry, then its tier 1 capital should be minimum of 12%. They shall maintain a minimum of 12% into, if it is into gold jewelry. Otherwise they shall have at least 10%. Here we are talking about, in both these cases we are talking about tier 1. Okay, let's go. Now we will understand what is tier 1 capital and what is tier 2 capital. Okay, so first and foremost, own funds. So what all comes under your own funds? First is your equity, free reserves, capital reserves, except revaluation reserve. Revaluation reserve is not considered in tier 1. Revaluation reserve is considered here in tier 2. We will see this part later, but for now understand that equity reserves, capital reserves, except revaluation reserves. Perfect. Second one, so in case if you have made any investments in other NBFCs, reduce that. Perfect. And then the third one, if you have made any investments in your subsidiaries and group companies. Okay, if you have made any investment in subsidiaries and group companies, up to 10% is fine. Up to 10% of own funds, it is fine. If it is more than 10% of the own funds, reduce. Clear? Now, perpetual debt up to 15% of the aggregate Tier 1 capital of the previous year is allowed. Now, here let's try and understand this with an example. You have issued like 100 crores for the current year. Now, how much is allowed? You have to see previous year Tier 1. Okay, previous year Tier 1 is around 50. So, previous year Tier 1 is 50 crores. Okay, on this you have to apply 15%. Up to 15% is allowed, no? So on this 15% will come to 7.5 crores. Okay, out of 100 crores, 7.5 crores will be allowed in Tier 1. You will consider 7.5 in Tier 1, and then rest of the amount will go to Tier 2. See here, if you see balance 85%, that will go here. Okay, 15% will be here, 85% will be there out of the issued portion. Clear, no? So it's very simple and easy to understand. You have to do 1 or 2 times. It's like math, in direct tax you have done math calculations, 50p slum sale. There also you do many additions and deletions, right? In the same way here also you have to compute Tier 1 capital and Tier 2 capital. So Tier 1 is very easy. First is own funds. Own funds may you will not include revaluation reserve, and then you will reduce whatever investments that you have made in the NBFCs. And then in case if you have made any investments in your group entities, up to 10% of the own funds. Okay, own funds. Up to 10% of the own funds is allowed. Anything more than that, disallowed. You should reduce. And then perpetual debt instrument, again there is a limit up to 50% of previous year Tier 1. Okay, previous year Tier 1, you should see previous year Tier 1 capital. On that 15% is allowed in Tier 1 capital. Perfect. Let's see what all things will come under Tier 2. See here preference shares are covered. Here equity is covered, right? So here preference shares are covered other than compulsory convertible. If it is a compulsory convertible preference shares, that will not come. And then revaluation reserve, here we have not included revaluation reserve. Revaluation reserve, here it is included, but only 45% you have to take. Rest of the 55% will go as a discount. Okay, only 45% will be allowed under Tier 2. So revaluation is on general reserve will come here, and then general provisions including on standard assets, and then plus loss reserve. Again there is a limit on loss reserve. You have to take 1.25% of the risk weighted assets. Okay, 1.25% of risk weight assets loss. Hybrid instruments, subordinated debt, everything will be included. And again perpetual debt instrument, here we have considered 15%, and here we are considering 85%. Please do this 1 or 2 times. Definitely there's a definite question from this chapter, we can expect this. And if this video was helpful, please do subscribe and share with your friends. See you all in another video. Let's go.